Hi everyone. In some of the videos which were recently released, I was discussing about the common errors which were made while filing VAT return form number 201 in the case of output. That means while disclosing the output liability, the errors noticed and how a VAT consultant should rectify such errors. Now we are going to discuss today in this session the common errors which are noticed while filing the VAT return form 201 in the case of input credit while claiming the input credit. That means box number 9 and box number 10. And what a VAT consultant should do on it once they see an error, how the VAT consultant should advise the clients or the customers to rectify such errors. That's what we are going to look today. One of the important area while taking the input credits is in the case of where the supply is there exempted as well as taxable. That means if exempted supply is there and taxable supply is there, in such case the eligibility to take input credit, there people make a lot of mistakes. In the executive regulation of the VAT law, Article 55, it is explained how the apportionment of input tax has to be done in the case of exempted supply as well as taxable supply. The apportionment formulas as shown here. Recoverable tax divided by recoverable tax plus non-recoverable tax and apply 100, that is the percentage, convert that into percentage. This is the formula given in the law to make the apportionment of the input tax. Let us see this with an example in detail. In this example, we are taking as a commercial property and residential property. Both properties are there for a company. Assume that residential property is fully exempted. That means those are the residential property which are more than 3 years and commercial property under 5% category. In this example, I have shown maintenance expenses. In the case of maintenance expenses, 100,000 plus 5,000, 105,000 is the total amount paid for as a maintenance expense in the case of commercial property. In the case of residential property, total amount paid is 210,000. 200,000 as the expenses and 10,000 as the input tax. See the third column, that is mixed supply, that is residential plus commercial. To the extent of 420,000, we are not able to segregate. That means we are not able to segregate between commercial property and residential property. So it is called as mixed supply. So in this example, 105 is identified as the commercial property related and 210 is identified as the residential property and 420,000 is mixed, we are not able to identify. The same way, electricity charges, which is 21,000 including taxes related to commercial property and 31,500 is related to residential property and 42,000 for the common area. We are not able to segregate between commercial property and residential property. See the third row, total VAT amount. In the case of commercial property, 6,000 is the total VAT input credit eligible, that is 5% taxable. So input credit paid was 6,000. We are eligible to take input credit fully. In the case of residential property, which are exempted category, total tax paid is 10,000 plus 1,500, that is 11,500. So we are not eligible to take input credit for such residential property because residential property is under exempted category. From the mixed category, that is residential plus commercial, where we are not able to identify, it is a common expenses. Out of that, total tax paid was 22,000. 20,000 plus 22,000, that is 22,000 tax paid. What is the formula for recoverable for the common input credit. The calculation is like this: recoverable divided by recoverable plus non-recoverable. So 6000 divided by 6000 plus 11,500, that means 6000 divided by 17.5 equal to 34.28 percentage. We have to round off to nearest percentage, that is 34 percentage. Hence this percentage has to be applied for the common expenses, tax paid on common expenses, that is 22,000 into 34 percentage, that means 7,480 dirham. This is the amount recoverable against the amount 22,000 common expenses. So in this example, in short, the total eligible amount for recovering VAT is 6,000 plus 7,480, that means 13,480 is the total amount which is recoverable for the entire expenses. Eligibility to take input credit on motor vehicle expenses. There is a specific provision related to this. Still, people are confused, and VAT consultants also advising in different ways to the clients. That's why I would like to give little attention related to this provision. Just check whether motor vehicle is in the company's name or not. If the motor vehicle is registered in company's name and used only for business purpose, then the tax paid, such as while purchasing the vehicle, when you pay the tax, or while on lease or rental basis when you are taking the motor vehicle, then the tax paid for such expenses, input credit can be taken. But if the motor vehicle is used for personal purpose, that means in the law it is mentioned that if it is available for personal purpose, then the company is not eligible to take input credit. In short, if the vehicles are available for personal use, then the cost incurred in the case of purchase or a lease or rental basis, and the part of the VAT paid against such expenses cannot be made available, input credit cannot be taken. But if it is exclusively used for business purpose and not available for personal purpose, in that case we can take the input credit for such expenses. Then the other question is whether the expenses related to petrol or maintenance and everything can be taken for the company or not. Of course, by extending this logic and by considering the provisions and the intention of the law, the expenses, if the expenses are incurred for business purpose, nothing wrong in taking the input credit. Make sure that you are maintaining the proper supporting documents to make sure that it is comfortable for the auditor, the VAT auditor, the tax auditor while doing their investigation or the tax audit, and make them comfortable that the supporting documents prove that the vehicles are used for business purpose. FTA has released a clarification related to the entertainment of expenses and the input tax paid on such entertainment expenses, whether the input can be taken or the input credit can be availed or not. Let us see what are such expenses. Many people in the market has got a doubt on eligibility to claim input credit on entertainment expenses, eligibility to claim input credit on office pantry expenses or the food expenses during the meeting, or the credits or the office parties or staff parties, hotel accommodation, etc. Let us see whether such expenses, the VAT paid on such expenses, are eligible for input credit or not. Office expenses such as employee on domestic business trip stay in hotel, or employee on business trip and spend for food and drinks, chocolate, snacks, etc. given in office meetings, tea and coffee available in office, flowers in reception, decoration on special events, etc. All these expenses incurred and the tax paid on such expenses can recover. That means under box number 9 we can recover all the tax paid for such expenses. Please keep in mind the supporting documents for such expenses. That means to get an input credit on such expenses, the proper invoice is mandatory. So make sure that it is always better to have a tax invoice in your company name itself. If it's a simplified tax invoice, there will be a question whether it is exclusively used for business purpose or not. So to get an eligibility to take input credit, it's always recommended to have a tax invoice in the name of the company, and you should make sure that such expenses are incurred only for your business purpose. When I discussed with different tax consultants, I came to know that the labor accommodation and the tax treatment related to labor accommodation, or the expenses incurred and the input credit eligibility for labor accommodation, is one of the areas where the common errors are made in the market. So that's why I thought of discussing that point as well here. One of the point is that whether the labor accommodation is a residential or commercial, whether it has to be charged at rate of 0% or exempted, or it is 5%. FTA has given a clarification recently related to this. Another area of question is the expenses incurred in the labor camp, whether the input credit for such expenses can be taken or not. Let us see these issues in detail. A labor accommodation will be considered as a residential property if the following conditions are met, like if it is a principal place of residence of laborers, that means that's their main accommodation. Second, if it is fixed to the ground, that means it's not a porta cabin where it is removable or movable from the one place to another place. It is constructed lawfully, that means it should be constructed with the permission of the local authority. Not serviced apartment like with bed and breakfast. It should not be coming under the category of serviced apartment. If breakfast and the bed space and breakfast is given, then it will be a serviced apartment. In that case, it will not be eligible to consider as a residential property. If additional services incident to residential in nature without additional fee, that means if any additional service is given which is part of residential in nature without an additional fee, it should be fine. Example, cleaning of communal area, maintenance service on property, pest control, garbage collection, security, utilities, or access to facilities like a gym, pool, etc. These are the part of residential facilities, but without an additional fee. If these facilities are given, still the property will be considered as residential in nature. In such cases, if the property is leased out or sold within 3 years, the first lease or first sales, then it will be zero rated, otherwise it will be exempted. If the labor accommodation is coming as a serviced accommodation, if the following conditions are met, that means if telephone and internet access is given, cleaning service of room is provided, laundry services like changing of bed linen, etc. is given, catering services given, or maintenance service other than general upkeep of the property. If all this kind of facility or any of this kind of facility is given, the residential property nature will be changed to a serviced accommodation. In that case, 5% tax will be charged. From the previous two slides, I hope you understood the difference between a residential property in nature or a serviced accommodation. In the case of serviced accommodation, it will be 5% taxable, but if the property is in residential nature, it will be either 0% or it's exempted. Now the other question is whether the expenses incurred in the labor campus, whether such expenses, the tax paid on such expenses are recoverable or not. Yes, we have to see the law in general. If the expenses are incurred for the business purpose and if they are not in entertainment in nature, then the expenses incurred in the labor accommodation can be taken. The expenses, the input credit incurred for the expenses in the labor can be recovered. So you have to analyze case by case and make sure that it is not entertainment in nature. In such case, you will be able to take the input credit. You can review you can go through the guidance which we have already covered in different, we have already released a blog related to this one. So in detail we explain what is an entertainment and how it has to be identified, whether it is entertainment in nature or other ways. For example, if it is covered in under any of the labor law, or if it's a contractual obligation or documented policy, and if such services are necessary for the employee to perform his role, and if it is general or commonly accepted in the business, then such expenses will be business expenses. It will not be an entertainment in nature, and in such expenses we can take the input credit as well. In this video, I explained some of the cases where VAT consultants should give attention while considering the VAT Return Form 201, the tax treatment and eligibility to take the input credit on such expenses. So I covered only few items. I may not be able to cover all those items in short videos, but we will be available to serve you at any time, and our team is available in the UAE and other Emirates as well. And now we are serving in the country, in the Bahrain as well. So we are always available at your service.